presentation with that music. You've got to love it. Welcome to ASXMarketWatch.com. This week we will be looking in our Market Watch at the ASX Top 200 and of course the Dow Jones, because the two are so closely tied. It's good to look at those two in conjunction. This week I'll start with the Top 200. And all I've done, just a simple tool, our famous trend line. It's really quite easy to draw, and so anyone should be able to do it. We've got our longer term trend line here. It was crossed in July 2009, and as such we've been able to draw our uptrend line. Now what we've got recently though, actually, is this little phenomenon here, which is what I explained last week. The market would actually have to close below our uptrend line. It was a steeper uptrend line last week, and I'll just draw that quickly in there. So that was our steeper uptrend line last week, but it would have to cross below that as well as our previous trough. And it actually crossed below it, but it could not close below it last week. Actually, it was just a few days ago. And this to me is quite a bullish signal. Now, what I've been able to do then is actually flatten our steeper trend line, because we've got our new trough here. And what this does is give us a bit more leeway in the shorter term, which is a good thing to have. What we're looking for now is for the market to cross below the steeper trend line, which has been flattened recently because we've got this new trough, and it would also have to close below the previous trough for me to be bearish in the short term. We've still, as you can see, this box here, we've still got our longer term uptrend line in place. So this is going to provide a lot of support for the market, and really, I mean, there's no reason not to be bullish, and there's a lot of profit to be made in buying stocks at the moment. It's good to use the overall market as your barometer for where the market is heading. There's one last thing that I really want to show you, because a lot of people have started asking me where the market will head to. Like, everybody wants a prediction, and I don't really like giving predictions, but there is a simple way that we can do it. This is still the daily chart, looking at it from October 2007 to today. But what I have done is just put in a price retracement. So we've got our top, our bottom, and price retracements of 25%, 38.2, 50%, 61.8, 75%. These are Fibonacci and Gann ratios. I don't discriminate. I use them both. I think they're great, and you can learn about them on ASXMarketWatch.com if you want to. It's free, so all you really have to invest is your time, which is always a good thing. But the strongest resistance line that we'll be looking at here is the 50%, and that is also at a very strong level at 5,000, so that's quite a psychological level for investors. Interestingly, the market has already bounced off the 38.2% retracement. That's a Fibonacci retracement, and it's already bounced off that one. So we could very well find resistance at 4,500, which is around that level there. The market is looking very strong, but all you can do is follow what the market is going to do. So really, it's up to the market to tell us, and that's why we use those trend lines and our exit signals. So I hope that has helped you from the top 200 point of view. Quickly looking at the Dow Jones, this is a daily chart of the Dow Jones, and I've just drawn in my uptrend line. I've also drawn in the longer term downtrend line, so this is the only thing that I'm worried about in the long term for the Dow Jones, is that resistance is hanging overhead there, and chances are, as I said last week, we'll probably sort of meet in the middle there somewhere between the uptrend line and the downtrend line, and that'll be really a sort of a defining moment for the direction of them. So there's our steeper trend line on the Dow Jones, and here's our longer term trend line. It would have to cross below the 8,900 mark, really, maybe even a little bit less, 8,800, but in the short term we'd be looking for it to close below 9,050. So a very, very simple tool for gauging where the overall direction of the market is heading, and then we can buy and sell stocks accordingly. For instance, if the market's going up, it's not wise to short stocks just because there's too much resistance there, in all honesty. At least that's what I've personally found. So I hope that has helped you a lot. As usual, the music is starting again to kick me out, so I'd better be off, but please join me next week. It'd be great to have you, and I love doing these things. And if you want me to look at any individual stocks, please just give us drop us a line at asxmarketwatch.com. I'd be happy to hear from you. Thanks very much, and I'll see you again next week.